A combination of higher airport charges, increased fuel prices and weak passenger demand pushed low-cost carrier One Time Holdings into a loss for the 6 months to June. One Time reported an attributable headline loss of 21.3 million rand for the 6 months to June, compared to attributable earnings of 14.8 million rand in the same period last year. Revenue was flat at 654 million rand.
One Time's got a market cap of 103 million rand. They got a zero dividend yield, not paying dividend. Their PE's coming in negative at around -5.5, simply because of that loss. Paul, airlines, these guys are getting squeezed from both directions. On the one side, they got oil prices rising, they got airport fees going up. On the other side, they got consumers not other ways of travel. And the biggest problem is that the SAAs of the world can come and compete in their turf if they want to.
No, most definitely. I think we've seen that in the past, and not long ago, about 4 or 5 years ago, we saw one airline also leaving our shores. And I think if One Time are not careful, I think likes of SAA and Kulula could squeeze them out. I don't know about Velvet at the moment. They're still a newcomer in the market, but I believe this is what we need in the market. A lot of competition, and I think maybe One Time are crumbling under competition at the moment.
But it's not really their fault, though, is it? Because there's a lot of stuff that you've mentioned now in terms of the low passenger demand, the rising fuel prices. A lot of it has got nothing to do with the operations of the company or even how sound the management is.
Well, I think there is a point from that, but I think at the same time we need to look at where the stock has come from and where it is now. We reached a high in the middle of last year, just after the World Cup, and I think a lot of people anticipated that not only should the airlines and the hotels do well after the World Cup, but we haven't seen the traffic coming in from the international markets, either from the East or from Europe and the Americas. And I think the likes of One Time have suffered because of this. So firstly, it's been an issue of operationally, they haven't been able to find the right destinations. They've cancelled the Maputo a flight, and obviously hence they've suffered from that. So they've streamlined the income streams to basically the domestic market, and I still believe they still have one international route. So I think they're really cutting it fine.
Colin, let's go to you on the wall. His chart just collapsing. I suppose two issues. The lack of liquidity makes it harder to chart. I noticed you picked a weekly chart, and I imagine that's because of liquidity issues. And secondly, there's a bit of support there around the mid-30s or so. Would you look for it to hold, or is it a case of wait and see?
Look, it's a support line going back to 2008, so it's a well-established support line which it's trading at right now at 35 cents. There's a reasonable chance it can hold, but really it's a guess at this point. I myself wouldn't go in and buy it unless it breaks out above this resistance line at 45 cents. But we see on the oscillator here, it is giving a large positive divergence, which is an early warning of a rally. But when it comes to these small cap stocks, I personally would not buy until it actually breaks out above resistance. Otherwise, one's really, as they say, catching a falling knife. But if you're prepared to take a chance, it's perhaps worth a go around 35 cents with a tight stop loss.
Paul, I want to bring it back to you here. You mentioned issues around, they cancelled the Maputo. We've seen a fair bit of a shakeout in the board. Glenn Osmond, who was one of the co-founders, leaving as CEO at the end of September, leaving as CFO at the end of November. Has he perhaps been blamed a bit for it? I mean, you look at these things, and of course they say wonderful things, and they wish him well, and he's off to the Cape to go and relax with a glass of wine. I just think that, it's a fairly quick departure, and maybe there's a sense of, the SAFTech didn't work as well, it's not quite happening, and he perhaps bearing some of the brunt, fairly or not.
I think obviously in situations like this, some heads have to roll, and it's unfortunate that he has to go so quickly. But I believe if they're looking to turn around the business, they have to take some drastic measures, and I think in the short term, the company still needs to do a lot of changes in the way they operate, and be more efficient and try and be more competitive in the market.
So how do you feel about the stock? Hot or not?
Not so hot at the moment.
Not so hot. Colin, how do you feel about the stock?
Right now, just because it's fallen so much, I would be actually neutral. If you'd have asked me a few months ago, I would definitely not have been hot. But because it's fallen so much, it's at this very solid 3-year support line. I'd be neutral. If it breaks down below 34 cents and stays there for a week, I would definitely be cold on it. It could then really fall quite a lot more. But if it does break out above 45 cents, this line 2 over here, that would be a buy signal in my book.
A lot of conditions there. And for you, Simon, I
My
know you're
conditions
really,
are
really
simple.
big on the dividends. They haven't paid a dividend, obviously, because they've made a loss. But it was just interesting to me that the dividend policy is going to be maintained at 8 times cover. What are the chances that they'll actually even make any earnings to pay out that dividend for the next 6 months?
It's almost like me promising you to take you to Paris if I win the lotto and I buy the ticket. You know, 8 times cover is not a very generous dividend. First, they got to make money. Am I hot on this? Forget it's one time. Airlines. If you gave me an airline, I would give it away. I do not like airlines. This is not hot.
Not hot for Simon. Well, there you have it for the show. Let's now come to the guest stock picks. Let's start with you, Paul.
Right. Today we'd like to look at African Rainbow. They had their numbers out last week. We feel that they had very decent numbers, despite them coming back this week. They reached a low of 172 and bounced from there. Rallied today, trading just in the early 80s, 180 odd. And we feel that the stock hasn't really had the opportunity to fully explore or to fully show the value of the numbers that they produced last week. So I think we've got a short-term target of 200 on African Rainbow, and I think in the short term they should still do very well.
Well, the fact that they've got a PE of 15 obviously supports what you've just said now, because they're not an internationally diversified company. You've got BHP and Anglo sitting on a PE of 8. What do you make of that?
Well, I think everybody would prefer to buy Billiton and Anglos at the moment. But I think, like I said earlier, I don't think African Rainbow as fully, or the price is fully priced in their earnings. And I think we could see them get up to about 200. And I agree, Billitons and Anglos could still push higher, but I think I'll rather stay domestic and look for African Rainbow. Yeah.
Colin, you've already pulled up the chart for your favorite stock, British American Tobacco. Tell us why you like it so much.
There are a lot of interesting things on this chart. Firstly, a huge, massive triangle formation, which took about 18 months to 2 years to form, which it broke out of, and from that breakout at 270 Rand, it's pointing to a target of 367 Rand. It's currently trading at 312 Rand. There's still quite a good bit of upside there, about 20% at least in the stock. That's a minimum target. It's not a short-term pick. It would be more medium to long-term, I'd say, over the next 8 to 12 months, going from its current level up to 367 Rand. It's just really a share that one can buy if you're a trader or you're a longer-term investor. It's really just good on all fronts. If you're a trader, I would wait for pullbacks to about 300 Rand. If you can get it at 300, even less, if it pulls back to 290, that would really be a great buying opportunity. If you're a medium to longer term player, you could buy it and just simply hold it up to that 367 target. But traders will certainly be able to buy pullbacks all the way up as it continues to make its way up. Another thing about this share which I like is the way it's held up so beautifully during this past month of massive selling on the market. And that's a sign of a share that's got real underlying support and underlying strength. So there are really a number of many good factors about this share. It also pays a very good dividend, close to 5%. So all in all, it's really a good pick. Right now, as we speak, though, is slightly overbought on the oscillator. So if it does pull back to 300 Rand or even a bit lower, that would really be a great buying opportunity.
So Colin thinks BAT is hot. Paul thinks ARM is hot. What do you make of their
BAT is easy. I smoke cigarettes, so I own it, so I think it's hot. I have to. I like the stock, and it's been doing brilliantly well and defensive, as Colin said, in the turbulent times. ARM I really like. I like their joint venture strategy and the like. I got to say, my preferred pick is Billiton, and again, disclaimer, I own Billiton. But ARM has been doing, essentially, outperforming the international majors, and you've got to say, it looks like it's continuing in that space. So I think both of them, hot.